Welcome, everyone. This lecture will cover the topic of public goods. All semester, our discussions have focused on goods that we consider private goods. We will now shift focus to goods we will define as public goods. All goods we have talked about so far this semester are what we call private goods. Private goods are defined as both rival and excludable. A good is rival if consuming it prevents someone else from consuming it. Think of an apple. If I eat the apple, you can't. A good is excludable if you can keep people from consuming it. Typically, this is done through payment. If you didn't buy it, you can't have it. So private goods are both rival and excludable. Most goods we deal with on a daily basis are private goods. Try thinking about the goods all around you and ask yourself if those items are rival and excludable. Now, switching gears, public goods, the focus of this lecture, are non-rival and non-excludable. That means that for public goods, we cannot keep people from consuming them, and even if one person is consuming it, that does not prevent someone else from consuming it. This will make more sense as we talk through some examples. Let me give you a simple example. Public radio is a public good. Public radio is non-rival because even if I am listening to it, that does not prevent you from also being able to listen to it. Public radio is also non-excludable because you do not need to pay to listen to the radio broadcast. In general, governments provide public goods, whether that is local, state, or national government. Here are some examples. Notice that all of these examples are government provided. Because of our current situation, let's focus our example on the Center for Disease Control. The CDC's main goal is to protect public health and safety through the control and prevention of disease, injury, and disability in the U.S. Is the CDC a public good? For the CDC to be a public good, it must be non-rival and non-excludable. Let's break this down. Non-rival means that if the CDC is helping me, it can also be helping you at the same time. Check. Yep, that makes sense. Non-excludable means that we cannot exclude some people from the CDC's help. Yep, we can't keep anyone from benefiting from the CDC's recommendations. Because we have checked that the CDC is both non-rival and non-excludable, we can define the CDC as a public good. I suggest you go through some of these other examples to make sure you understand what it means to be non-rival and non-excludable. It is also important to point out that once a public good is produced, because it is non-rival and non-excludable, it is available to all individuals in an equal amount and can be supplied to an additional individual at zero marginal cost. Just a little bit more about some other categories of goods. We have already talked about private and public goods. The box in this table I would like you to focus on are goods defined as open access goods that are rival and non-excludable. Think of a public pond. A public pond is non-excludable in the sense that anyone can go fishing in the pond, and it is rival because there is a limited number of fish, and if I catch a fish, that is one less fish in the pond for you to catch. Open access goods are subject to what is referred to as the tragedy of the commons or overuse. Anytime there is a renewable resource, such as fish in a pond, that is an open access good, there is the risk of overusing the renewable resource at a quicker rate, and you end up depleting the resource. That is why it is referred to as a tragedy. Many times these resources run out. So public goods are great, but how much should we have since they are non-rival and non-excludable? The optimal amount of a public good can be calculated where the sum of the marginal benefits equals the marginal cost of providing the public good. If we each get some benefit from the public good, we want to add up all of these benefits and then compare the total benefit to the cost of providing the public good. The problem is that since public goods are non-excludable, it is not clear who should and who does end up paying for the public goods. There is one line of thought that we could tax each person based on their expected benefit of the public good, but do you see any potential issues with that idea? What if someone knocked on your door asking you what your benefit was and how much you would be willing to pay for a public good? Many people would not be honest about their marginal benefit, and since the public good is not excludable, there is no incentive to be honest. Many times with public goods, we fall into the free rider problem. The free rider problem arises anytime people try to benefit from public goods without paying for them. Here is a simple free rider example that you can probably relate to. If any of you use someone else's streaming account, you are free riding. Time to practice. For each of the practice problems, I suggest you pause the video to try as if we were in class and then proceed. 3 residents are considering hiring scientists for basic research. The marginal cost of hiring a scientist is $90,000 per scientist. The table below shows their marginal benefits. How many scientists should the residents hire? Remember that to find the optimal level of the public good, the number of scientists in this case, we need to first add up the marginal benefits for all residents and then compare the total marginal benefit to the marginal cost of hiring each scientist. The total marginal benefit for the first scientist is $125,000. The total marginal benefit for the second scientist is $100,000. And the total marginal benefit for the third scientist is $65,000. Since each scientist costs $90,000, it is only worth hiring the first 2 scientists. True or false? If a public good has been provided to one consumer, the marginal cost of providing it to another consumer is 0. True. We just went over this on a recent slide. Public goods are non-rival, so even if I am already consuming it, you can consume it too at no additional cost. True or false? The free rider problem is more severe for a small group of people than for a large group of people. False. This one can be a bit tricky. Let me illustrate this answer with an example or two. Think of a neighborhood when there is a big storm and there is a power outage. Imagine a neighborhood with only 3 houses and imagine a neighborhood with 10 houses. If you live in the neighborhood with only 3 houses, you would probably be one of the first people to call the power company to report the power outage. But if you live in the neighborhood with 10 houses, you would probably think someone else is going to do it and basically free ride off the other neighbors reporting the power outage. That is why the free rider problem is more severe in larger groups. Here is another true story from the New York Times. In 1964, a young woman was stabbed outside an apartment building across the street from where she lived in Queens. It was claimed that 38 witnesses saw or heard the attack, but none of them called the police or came to her aid because they assumed one of the other witnesses would call. The free riding problem is always a bigger problem the larger the group is. The residents of a town plan to purchase dragons to protect their treasure. The dragons would be a public good to all residents of the town. The residents consist of 10 rich people, 10 middle-class people, and 10 poor people. The table below shows the marginal benefit of a dragon for each type of resident. For example, the marginal benefit of a third dragon is $500 for a rich resident. The cost of buying a dragon is $14,000. How many dragons should the residents buy? Again, remember that to find the optimal level of a public good, the number of dragons in this case, we need to first add up the marginal benefits of all the residents and then compare the total marginal benefit to the marginal cost of buying each dragon. There is an extra step in this problem because we have 10 of each type of resident. When we add up the marginal benefits, we need to remember that we have 10 rich residents, 10 middle-class residents, and 10 poor residents. For example, when adding up the marginal benefits for the first dragon, the total marginal benefit for the rich residents is 10 times $700 for a total of $7,000. The total marginal benefit for the middle-class residents is 10 times $600 for a total of $6,000. And the total marginal benefit for the poor residents is 10 times $500 for a total of $5,000. Therefore, for the first dragon, the grand total marginal benefit is $7,000 plus $6,000 plus $5,000, which is $18,000. We need to do this for each dragon, which you can see in the column added on the far right of the table. Now that we have the sum of the marginal benefits, we can compare this to the marginal cost of purchasing the dragons. Each dragon has a marginal cost of $14,000. We can see that it is only worth it to the residents to purchase a dragon if the sum of the marginal benefits exceeds the cost of purchasing the dragon. In this example, the residents should only purchase 2 dragons. This question will demonstrate another way we can solve for the optimal level of a public good. Monte Cristo, California has 500 people. Every year a fireworks show is held. Each resident is willing to pay $4 for fireworks. If the marginal cost of providing the fireworks F is 2F, how many fireworks should they buy? We can use the optimal public good equation to solve for the optimal amount of fireworks. We first need to sum up the marginal benefits. We are told there are 500 residents who are willing to pay $4 each, so our total marginal benefit is $2,000. We are also told that the marginal cost of providing the fireworks is 2F. We can solve for F and find that the optimal amount of fireworks is 1,000. Let's try another one like this. Santa Catarina, California is considering buying some beachfront property to be used as a park. After surveying the entire population of 100 people, the city government determines that each individual is willing to pay $10 for each acre of the park. If the marginal cost of an acre of beachfront property P is given by 200 P, what is the optimal number of acres for the park? Again, we can use our formula. We have 100 residents who are willing to pay $10 each, so our total marginal benefit is $1,000. Our marginal cost is 200 P, so after solving for P, the optimal size of the park is 5 acres. This question is a little tricky. There are 3 types of people in the town of Awesomeville: 90 type A, 30 type B, and 30 type C, for a total of 150 residents. Everyone in the town loves public gardens. Each type A person is willing to pay $10 per acre of garden. Each type B is willing to pay $20 per acre of garden. And each type C is willing to pay $40 per acre of garden. The marginal cost of providing G acres of garden is 3G. What is the optimal number of acres for the garden? Like I mentioned, this question is a little tricky. We now have 3 types of residents. We need to make sure we add up the marginal benefits for all 3 types. We have 90 type A who will pay $10 per acre, 30 type B who will pay $20 per acre, and 30 type C who will pay $40 per acre. Our total marginal benefit is therefore $2,700, and by setting this equal to our marginal cost of 3G, our optimal size of the garden is 900 acres.